Apple Inc. needs no introduction. Founded in 1976 by Steve Jobs, Steve Wozniak, and Ronald Wayne, Apple has grown from a small startup in a garage to a global technology powerhouse. Over the decades, it has consistently pushed the boundaries of innovation, setting new standards in the tech industry. It is a global technology giant, renowned for its innovative products and loyal customer base. The iPhone, iPad, and MacBook are just a few examples of how Apple has revolutionized personal technology. Each product launch is eagerly anticipated by millions around the world, often setting new sales records. From iPhones to Macs, Apple has revolutionized the way we live, work, and connect. Its ecosystem of devices and services creates a seamless user experience that is unmatched by any other company. Whether it's for personal use, education, or business, Apple products have become an integral part of our daily lives. At its peak, Apple achieved a staggering market value of over $3 trillion. This milestone was not just a financial achievement, but a reflection of the company's influence and dominance in the tech industry. Investors and analysts alike marveled at Apple's ability to consistently deliver strong financial performance. This made it the world's most valuable company. Apple's market capitalization surpassed that of many established industries, highlighting its unparalleled success. The company's stock became a staple in investment portfolios, symbolizing stability and growth. This remarkable achievement was a testament to Apple's brand power, product innovation, and loyal customer base. The company's ability to create products that resonate with consumers on an emotional level has been a key factor in its sustained success. This period of market dominance showcased Apple at its zenith. The company's influence extended beyond technology, shaping trends in design, marketing, and retail. Apple's retail stores became iconic, offering not just products but experiences that drew in millions of visitors each year. The company seemed unstoppable, consistently delivering groundbreaking products and exceeding financial expectations. Each new release was met with excitement and anticipation, further solidifying Apple's position as a leader in the tech industry. However, the business world is dynamic, and even giants like Apple are not immune to market forces. The tech industry is particularly volatile, with rapid advancements and shifting consumer preferences posing constant challenges. The year 2024 marked a turning point for Apple, as its market value began a significant decline. This downturn was influenced by a combination of factors, including increased competition, market saturation, and changing economic conditions. Despite these challenges, Apple remains a formidable player in the tech industry, continually striving to innovate and adapt. From January 2024 to April 2025, Apple experienced a dramatic drop in its market value. This decline amounted to a staggering $250 billion. This significant drop sent shockwaves through the tech industry and beyond. Investors and analysts scrambled to understand the reasons behind this sudden shift in fortune. This period was marked by uncertainty and concern for Apple. The company that had once seemed invincible was now facing significant challenges. Understanding the reasons behind this market value decline is crucial for investors, analysts, and Apple itself. One of the primary factors contributing to Apple's market value decline was the ongoing global supply chain disruption. The COVID-19 pandemic had exposed vulnerabilities in global supply chains, and the tech industry was particularly affected. Apple, with its complex and globalized supply chain, faced significant challenges in sourcing components and meeting production targets. The shortage of semiconductors, a critical component in electronic devices, hit Apple particularly hard. Delays in production and delivery led to frustrated customers and lost sales. The inability to meet the high demand for its products further eroded Apple's market value. The tech industry is known for its fierce competition, and this pressure intensified during this period. Competitors like Samsung, Google, and emerging Chinese brands were rapidly innovating and releasing competitive products. This increased competition put pressure on Apple to maintain its technological edge and market share. The smartphone market in particular became increasingly saturated. Consumers had more choices than ever before, and brand loyalty alone was no longer enough to guarantee success. Apple needed to constantly innovate and deliver exceptional products to stay ahead of the curve. The global economic landscape also played a role in Apple's market value decline. Rising inflation, interest rate hikes, and geopolitical uncertainty created a climate of economic anxiety. This uncertainty led consumers to be more cautious with their spending, especially on discretionary items like high-end electronics. As a result, demand for Apple's premium-priced products softened. Consumers were more price-sensitive and less willing to upgrade to the latest iPhone or MacBook. This decline in consumer spending power further contributed to Apple's market value decline. Section 6. Investor jitters. Confidence takes a hit. The confluence of these factors, supply chain disruptions, increased competition, and economic headwinds, led to a decline in investor confidence. Investors became more cautious about the tech sector's growth prospects, and Apple, despite its strong fundamentals, was not immune to this shift in sentiment. The decline in investor confidence was reflected in Apple's stock price, which experienced a significant drop during this period. The once reliable growth story of Apple was now facing questions and uncertainties, leading to a re-evaluation of its market value. Section 7. Apple's response: navigating the storm. Despite the challenges, Apple was not standing still. The company took steps to mitigate the impact of these external factors. Apple focused on diversifying its supply chain, seeking alternative suppliers, and investing in its own manufacturing capabilities. To address the competitive landscape, Apple continued to invest heavily in research and development, focusing on innovation in areas like artificial intelligence, augmented reality, and services. The company aimed to create new revenue streams and reduce its reliance on hardware sales. Section 8. A market in flux. Tech sector volatility. It is important to note that Apple's market value decline was not an isolated incident. The tech sector as a whole has been experiencing significant fluctuations. This volatility can be attributed to a variety of factors, including changes in consumer behavior, regulatory challenges, and global economic conditions. As investors react to these shifts, stock prices can swing dramatically, creating a turbulent market environment. The entire tech sector experienced a period of volatility and correction. This was not just a blip on the radar, but a significant adjustment that affected many of the major players in the industry. Companies that had seen their stock prices soar during the pandemic were now facing a reality check as the market recalibrated. Many tech companies that had experienced rapid growth during the pandemic saw their valuations decline as the world adjusted to a new normal. The pandemic had accelerated digital transformation, leading to unprecedented growth for tech firms. However, as the immediate crisis waned, so did the extraordinary demand for tech solutions, leading to a natural market correction. This broader market correction highlighted the cyclical nature of the tech industry. Investors and analysts alike were reminded that what goes up must come down, and periods of rapid expansion are often followed by phases of consolidation. This cyclical pattern is a fundamental aspect of the tech sector, driven by innovation cycles, market saturation, and shifts in consumer demand. Periods of rapid growth are often followed by periods of consolidation and reevaluation. During these times, companies reassess their strategies, streamline operations, and focus on sustainable growth. This process is crucial for long-term success and stability in the ever-evolving tech landscape. Apple's decline, while significant, should be viewed within the context of this broader market trend. It serves as a reminder that even the most successful companies are not immune to market forces. Understanding these dynamics is essential for investors and stakeholders as they navigate the complexities of the tech sector. Section 9. Looking ahead, Apple's path forward. Despite the challenges of the past year, Apple remains a formidable force in the tech industry. The company has faced numerous obstacles, from supply chain disruptions to increased competition, yet it continues to thrive. This resilience is a testament to Apple's strategic planning and its ability to pivot when necessary. The dedication of its employees and the loyalty of its customers have played a crucial role in maintaining its market position. The company has a strong brand, a loyal customer base, and a history of innovation. Apple's product lineup, from the iPhone to the MacBook, has set industry standards and continues to attract millions of users worldwide. The seamless integration of hardware, software, and services creates an ecosystem that is hard to match. This ecosystem not only enhances user experience but also fosters customer loyalty, making it difficult for competitors to lure Apple users away. While the road ahead may present continued challenges, Apple has demonstrated its ability to adapt and evolve. The tech landscape is ever-changing, with new technologies and market dynamics emerging constantly. However, Apple's commitment to research and development ensures that it stays ahead of the curve. The company's investment in cutting-edge technologies, such as augmented reality and artificial intelligence, positions it well for future growth. The company's focus on diversification, innovation, and customer experience will be crucial in navigating the evolving tech landscape. By expanding its product and service offerings, Apple can mitigate risks associated with market fluctuations. Innovation remains at the core of Apple's strategy, driving the development of new products that meet the changing needs of consumers. Additionally, prioritizing customer experience ensures that Apple maintains its reputation for quality and reliability. While the $250 billion market value decline is a significant setback, it is important to remember that Apple has overcome challenges in the past. The company's history is filled with instances where it faced adversity and emerged stronger. This resilience is a key part of Apple's identity, and it provides a foundation for future recovery. Investors and stakeholders can take solace in the fact that Apple has a proven track record of bouncing back from difficult situations. The company's future success will depend on its ability to continue to adapt, innovate, and deliver exceptional products and services that meet the evolving needs of its customers. As long as Apple remains committed to these principles, it is well positioned to navigate the challenges ahead and continue its legacy of excellence. The journey forward may be complex, but with a clear vision and unwavering dedication, Apple is poised to achieve even greater heights.